Tim, Tom, and Ted are identical triplets. And because they're not real people, they don't have any subtle differences to help tell them apart. They all also work at the same company, earning $20 an hour. One day, all three had a different emergency $400 bill to pay. And they knocked on your door because you've got money and they're like family to you. But you've only got enough to let one of them borrow money without hurting yourself. This example highlights the importance of credit history. Tim has a habit of borrowing small amounts of money from his friends and neighbors. However, he always pays them back on time, usually before day's end. Tom almost never borrows money, but when he does, it's for a large amount and for a good reason. He also pays it back in full, but usually late. And Ted, well, he's never borrowed money in his life. So who do you lend the money to? Tim is always borrowing money. $5 here, $20 there, and it's annoying to his friends. But he's always paid them back on time. So if you let him borrow it, you can't be sure that he'll repay you. Because even though he's repaid everyone else, he has no history of borrowing and repaying large amounts. Even though Tom doesn't borrow frequently, when he does, it's for large amounts. And though he's paid every loan back, he's usually late. So if you lend him the $400, you can be assured that he'll pay you back. But if you need that money by a certain date, can you really count on him to come through? And Ted, because he's never borrowed any money, he's got no one to vouch for him. So while he doesn't owe anyone any money, that's because no one's ever lent him any money, not because he's good at repaying his debts. These are the decisions lenders have to weigh when deciding which borrowers to lend money to. And they're going to look at not only how timely you are at repaying loans, but also the amounts borrowed. So here are some simple ways to start building that credit history. Starting with small amounts and working your way up to big amounts, especially if you don't already have a credit card. Step 1. Get a credit builder loan or a secured credit card. Normal credit cards are unsecured loans, meaning if you don't pay, the worst a bank can do is send your debt to collections and report you to the credit agencies. With a secured card, you put down a security deposit ranging from $100 to $5,000, and you can borrow up to that security deposit as a limit. But here's the catch-22. If you borrow up to the limit, it'll actually hurt you. However, keeping yourself to 30% of that limit and repaying it in full in a single payment period will help build your credit score. A credit builder loan works differently. With the normal loan, the bank puts money in your hand the minute they approve you. With a credit builder loan, they deposit that money in a CD or certificate of deposit account and lock it for 6 to 24 months while it collects interest. They then bill you every month a fraction of that amount plus interest for 6 to 24 months, reporting each on-time payment to the credit bureaus. This helps demonstrate your ability to make payments on time and handle large amounts of debt. At the end of that 6 to 24 month period, the bank releases all the money to you. So you get back the entire principal you paid plus interest. Yes, you had to pay more interest than you received. Think of it like buying yourself a higher credit score for tens of dollars every month. Having good credit history starts with building good credit history, and that means repaying large amounts on time without missing a payment. There's also another third way that's considered legal but unethical depending on how you go about it, and that is called borrowing somebody else's credit history. Normally, parents add kids to their credit cards as authorized users while they're still young. By the time they graduate from college, they've established credit histories thanks to their parents. But there are also marketplaces that sell this service, and it's definitely considered unethical to buy somebody else's credit history. This is because lenders need to evaluate the borrower's credit history and not the credit history of the person the borrower paid. That said, it's not illegal to add authorized users to a credit card. It's not illegal, yet, to accept money to do so. However, sellers risk voiding their terms of service by selling that access. And even if you do manage to get somebody to add you as an authorized user, you need to be careful not to drop their score. So you can't buy yourself out of bad habits without first developing good habits. And by having good credit habits, you can increase your chances of getting approved for that loan.